Vanakkam, Namaste and good morning to each and all. As you must have guessed it by the opening greetings, today FinTech Festival India is live from the beautiful southern Indian state of enchanting Tamil Nadu. More specifically from the SaaS capital of India and the gateway to the culture of South India, Chennai. Today we will take you on a journey that will start with discussions on wealth tech, moving on to lending, cryptocurrencies and the FinTech from Tamil Nadu, and we'll come to a conclusion with a brilliant session where we will introduce you to the young guns of Chennai who are working day and night to make sure that you are safe from cyber attacks and other technological threats. So without taking too much of your time, let us welcome our first group of speakers who will be discussing the digital investment in wealth tech and financial security of consumer in our wealth tech session. This panel is moderated by Mr. Srikanth Meenakshi, co-founder, PrimeInvestor.in. Srikanth will be joined by Ms. Natasha Jethanandani, Chief Technology Officer of Kaleidofin Private Limited, who will be joined with Mr. Karan Mehta, co-founder and Chief Technology Officer at Kissht, and Mr. Himanshu Gupta, Chief Operating Officer with Kristal.AI, and completing this panel is Mr. Ankur Mittal, co-founder of Inflection Point Ventures. So let's dive into the world of wealth tech and find out about the digital investment in wealth tech and financial security of the consumer. Over to you, Mr. Srikanth.
Thank you, Amit. Welcome to the first panel of the day. We are going to be talking about wealth tech. Wealth tech is a subset of FinTech, and these are very heady days for FinTech in India. This event, the broader event is called the FinTech Festival. And yes, although this is festival times, even otherwise there's a lot to celebrate for FinTech in India. Arguably, one of the leading FinTech ecosystems in the world. FinTech in India is having a heady moment at this point of time, a coming of age moment, you could say. There is an IPO going out from the FinTech space today. There is an IPO going out on Monday, and a week from Monday, there will be the biggest IPO that India has ever seen, and that will be a FinTech IPO as well. So this is truly a remarkable moment for the FinTech industry in India. And if there is one thing common about all FinTech companies, practically all FinTech companies, it is they all want a piece of wealth tech. Wealth tech takes your money and uses technology in one way, form or the other, and tries to grow it and give it back to you, the consumer. Wealth tech industry has had a fantastic growth, especially in the last 4 or 5 years in India, and it is poised to grow even more in the coming years. In this session, we are going to be talking broadly about wealth tech, but more specifically about consumer safety, privacy, and security concerns of consumers in this session. And thank you, Natasha, for joining me in person here, and thank you, Karan, Himanshu, and Ankur for joining me on this panel. I'll start off with a very broad question. And when we talk about consumer safety and issues surrounding consumer safety, one thing that is inescapable part of the consumer safety, both from a business point of view and from a consumer point of view, is the question of trust. More than any other subsectors of FinTech, wealth tech demands a lot of trust from the consumer for the business, and it is a enduring challenge for wealth tech businesses to create this trust in the consumer for them to be able to consume the product or service that the wealth tech company provides. So let me start off with a rather broad opening question about drivers of trust, right? In your experience, what creates trust? What are the drivers of trust in the marketplace, in the FinTech marketplace, in the wealth tech marketplace today? And how have you handled those challenges in your experience? First, let me turn to my left and ask Natasha, who is in person here from Kaleidofin. Yes, madam.
Thanks, and thank you so much for having me on this panel. Excited to, have this discussion. I fully agree with you that developing trust in this, world of, booming FinTech is one of the key problems we need to work on. And at Kaleidofin, I think we face it even more because our focus is on bringing goal-oriented wealth growth, savings, introducing people to new options around financial services to a segment. We focus on the informal sector customer. And so this is a customer who probably doesn't even, has not had any experience before, actually even investing. There's very little financial literacy. There's also very little tech literacy. So the trust factor that is required is enormous. Visualize a customer who's only used to saving in gold or chit funds and has never seen a world outside of that. And so for us, when we approached this problem, trust was one of the biggest things we needed to build in the customer. And I think we've through many interactions, many field studies, seeing our product be out there for the last 3 years, we have learned a lot. I think our biggest, cornerstone that we really focus on is we talk to the customer about their own goals. So we really focus in on life goals for the customer. And then we have a very strong tech and touch model. So we believe that sometimes to build that trust, the initial interaction can't be purely digital. So we have invested a lot, of course, in our tech platform, in the scale, but we have also done this by partnering with network partners across the country. These are either microfinance institutions who the customer already works with, agents in an NBFC that they might be already working with, cooperative banks where they may already be familiar walking into the branch. And so I think that ability for that person to first introduce the product and very often bring the customer on in an assisted onboarding really helps. And I think what we've invested in, therefore, is the technology to allow that to be a super easy experience while still making sure that all the pieces around consent come from the customer directly. So there's a constant interaction with the customer. And I think we also make sure, the only other point I would add to really strengthen the tech and touch model is beyond the initial onboarding, I think it's very important also for that customer to have the trust that they can reach you, they can check on their growth of their savings, on their investment. And so we've invested a lot around that piece. How do they connect with us? How do they hear from us proactively? How can they, even if the initial experience is assisted, how can they drive their own interactions going forward? Maybe use an app, maybe do it via a call center, maybe do it via IVR calls, because this customer, again, voice works much better. And we're talking about rural India, we're talking about semi-urban India, we're talking about even in urban centers, the informal sector customer. And we find this has really helped, the combination of goal-orientedness and tech and touch really builds trust.
Okay. Thank you, Natasha. I mean, 2 points that you brought out there was that, how factoring in some human touch would be very helpful in creating trust. And you brought out the important point that when it comes to WealthTech, trust is not a fire and forget thing. I mean, WealthTech is a long-standing relationship between a business and a consumer. And you need to keep the trust going. It's not just about acquiring it, but maintaining it over a period of time. Turning to Himanshu, you are in Kristal.AI, Himanshu. I mean, there is a artificial intelligence component to what you guys do. In that context, how do you see trust and how do you see building trust with the customer?
Right. Thanks. Good morning, everyone. And first and foremost, very happy to be here, be part of this panel and get a chance to share our views. So Meenakshi, specifically, Srikanth, on your question, right? I think WealthTech, as you rightly pointed out, trust is a very, very significant factor, as it should be. For us at Kristal, we tend to focus only on global investing. We've been doing that for the last 4 years. And we do see a different behavior in terms of clients outside of India versus the client segment or the target segment in India, which is primarily, people who want to start building a dollarized portfolio with 15 lakhs or higher, typically. So, your classic private wealth segment. Now, in terms of drivers of trust, of course, just to touch upon, we do see that, familiarity is something that goes a long way. So we've put in some efforts to make ourselves a little more visible. You could call it branding, marketing, but there's definitely an uptick around that. But when it comes to WealthTech, typically, and what we've observed in that specific segment is it's still very driven by the human touch factor. Now, we've approached that in two ways. One, of course, we make ourselves visible. So I think if I could use the term Natasha used, it's a tech and touch model. Just by making ourselves available, making those channels open in terms of either call centers or, callback channels and stuff like that, we've seen that has helped. And of course, in our case, the technology also serves to augment other wealth managers, wealth advisors who want to expand their practice. So we get a good combination really of technology and the human touch element. I think when it comes to AI, it's been a little interesting, right? And if I go back to early 2000s when we saw the onset of internet banking in India, it took a really long time to get penetration. But as a mobile first country, the comfort people now have on doing financial transactions online is of course increasing. And we see a bit of a divided behavior. In some cases, a certain segment is still very old school. In some cases, they actually like the fact that there is no human interaction. There is no possibility of, mis-selling, product push, which they may have experienced in the past. And that's where we find AI coming and playing a very important role, because the clients are still getting a very high quality of input of service, which is curated to what they want. It's not a cookie cutter model. And that's where we think that, further investment in that space is probably the right direction for us, but maintaining a very healthy balance in ensuring that the human element is not lost. So where clients need any kind of human support, it can be made available.
Thank you, Himanshu. I mean, what's very interesting to me is Natasha and you spoke about very different segments of the market, but both of you touched upon human connect. That's fascinating. Coming to you, Karan, you are in the lending space, Kissht, right? There, trust is a two-way street. How do you handle questions of trust with your business?
Oh, absolutely. So, no, you're very right, Srikanth. For us, trust works in a slightly different manner. Because in lending, you're actually giving a loan to the customer. You are trusting, in a manner of speaking, the customer with money. You're expecting him to repay back on time. So you might be tempted to believe that, trust will have a slightly lower bar here because, the customer is not trusting you with his money, but he's trusting you to give him money. But let me clear that notion. It's actually not like that. Trust is equally important even when it comes to lending. And it comes from very, very minor places that we see. And just to give you some example is one of the places where trust truly reflects very crystal clear day and night for us is our cost of customer acquisition. We used to have a version of the Kissht app which was probably not super polished 3 years back. With literally the same marketing campaigns, we see a much higher cost of customer acquisition. Today, with Kissht being a very, very high quality app, literally when you open the app, it reads premium. There is a trust factor. There is a recognition to the name of Kissht within the customers. The fact that there is a lot of emphasis that this is an RBI regulated NBFC doing a lending to the customers. In a market where there are literally everywhere you throw a stone, you'll have 10 lending apps ready to lend to customers. This is where trust really comes out. And you'll be very surprised to know our target segment is generally the lower income segments. They are also very intangibly able to associate trust with brands. So when you look at apps in the Play Store, there are tens and hundreds of apps that are doing lending, but you will still see a big disparity on the download numbers, on the cost of customer acquisition. And it comes through, and at least my read is that this is purely because of trust. When you have a brand that has been lending for a longer time, customers believe that this is a brand that is not going to make you jump through hoops for customer support. It's not going to make you jump through hoops for minor questions and queries. And that does reflect even in case of lending. So imagine how much more important it is for a WealthTech company. Having said that, at least what I believe is every single segment of customer, for them, trust comes in many different shapes and sizes and forms. Does not necessarily just simply mean that, okay, trusting means it's a big brand name like Tata, so I'll trust it or something like that. The polish of your app, whether there are parts of your app or your website that don't work. How does your website show up in Google searches? What are the reviews within Google that your company or your app has? All of these somehow registered in the customer's psyche, in their mentality, in their thinking, irrespective one way or the other, and it does play a very big part. And one of the big things about India, we are talking about India being the the FinTech capital. Literally, we are going to go big on tech for whatever we do. In India, we are actually going to be forced to do that, right? We are going to have to use tech in a very big way to reach the masses. You are talking about, a population of 100 crore plus, far-flung places across India. You want to reach all of them. You want to make your products, whether it is wealth tech, whether it's InsurTech, whether it is lending, all types of products you want to get to different parts of India, different customer segments. The only reasonable way to do it in India is to do it with the power of technology, to make it in an app, to make it in a website, put it in the power of their hands. You cannot have a model where it can be largely physical and partly digital. You will have to go very big on digital, to the extent as much as my colleagues mentioned about tech and touch. I believe tech has to play the the large role of making products available to masses. Now with this tech, because it's a cold screen on your phone and it's software, you are going to have to earn the customer's trust in many different ways. It can't be that you have an executive who's able to express your company's values to the customer to earn the trust of the customer. You're going to have to earn the trust of the customer in many different intangible manners. It will come from having a pedigree by being on the Play Store for many years, having a larger number of downloads, having higher rating, good reviews from customers. Even the screenshots that are there on the Google Play Store and the App Store, a lot of times, are able to signify trust to the customer. When they open your app, the experience they have, whether you're asking for too much data or too little data, whether you're making the journey seamless for the customer, all of these things play into the customer psyche. And at least our learning with Kissht, having we have an active user base of 18 million customers. We really see segments of customers who were the earlier customers having a much higher CAC compared to the newer customers that we're able to get up with a much lower CAC, just because we've put all of these pieces into play for us. And that at least reflects very well with the customer's perception and the NPS as well.
Okay, thank you, Karan. Turning to you, Ankur, you're an angel investor and you sure have a portfolio of companies, including fintech companies. My question to you, having heard the three or four of us speak, what is your opinion? Do you think is trust scalable from a business point of view? Can't hear you.
Sorry, I was in mute. I don't think you can scale without trust.
Okay, that's an interesting way to put it. Okay.
Fool me once, shame on you, and fool me twice, shame on me, kind of, right? So you may be able to acquire customers, but if you are not able to follow through, give the user experience that they want, there will be high churn rates, and that's not going to help business either, right? So, and that is where, the businesses should be very careful how they're acquiring customers, be very, considerate of their target market needs, exposing them to products that they understand. So especially when it comes on the wealth tech side, when you are telling people that we can help you manage your money, one of our startups, Simply, is doing that. Another of our startup, Streak, which is a very early stage startup focused on. So Simply is, for example, similar spaces, Kaleidofin, and large market, blue, gray collar workers. Now, a lot of these people may not go through the checks that Karan just spoke about. They may not understand how to, understand the number of downloads, the preview screens that are there on the Google or the App Store, and therefore they will go a lot by word of mouth, and therefore they will go through what their colleagues are using, and therefore you may need to have a more B2B2C strategy, because more of you will be then doing it together, and that is how you're building trust. Similarly, we invested in this early stage startup called Streak, which is kind of, again, something that Natasha picked upon, very important, financial literacy. We may be all educated, but we may not necessarily be financial literate.
Totally.
We may not understand the rights from the wrongs. So if somebody comes and says that cryptos are absolutely safe, I mean, there cannot be a more misleading statement than that, right? There are risks, and saying for 2 minutes that crypto is safe, and then towards the end at a supersonic speed saying cryptos are subject to all those market risks, that's not, you will attract some people will get burnt, and then the industry ends up getting bad name and all that stuff. So I think that trust is a very important part. I think sooner or later, the businesses that will succeed, you will see they have succeeded on trust. Now look at e-commerce, right? Why is Amazon so successful? Because through Amazon Prime, they have won this, the trust of people. They know that if they will say that it will be delivered in 2 days, it will be delivered on 2 days. In 99 out of 100 cases, it will get delivered in the promised timeline. And in one odd case, it doesn't get delivered, there will be messages. In FinTech, you are asking people to part away with their hard-earned money. In case of Kaleidofin, simply, you are asking people to get away money earned with a lot of hard work, trust, sweat, tears, joy. And therefore, overall, you'll have to build processes, practices. So for example, simple thing, right? In Simply, one of the first things that they built was how can you withdraw your money within few minutes. Now, it is very important, because if tomorrow you think that to withdraw your money, you will need to wait for a week or 2 weeks or 3 weeks, you will lose trust of these people. They will never invest in you again. So it might be, it might affect your unit economics to be able to give the money right when this person wants it, because you will need some settlement time period with where you have invested the money. But the ability that you can get your money within few seconds after you press enter and the money is in your bank account, that is trust.
Excellent. Thanks, Ankur. If I may stay with you for a follow-up question. The panelists spoke about tech and touch model, and there is also a talk about phygital model and all that stuff. And if you look at Policy Bazaar's RHP document, they're going IPO on Monday. They are talking about using the proceeds of the IPO to go offline with their with their expansion. Do you think this is going to be some kind of a trend going forward in FinTech, that that some kind of physical presence is going to have to augment technical platform infrastructure?
I think that goes back to that trust, which is the overarching word today for the call. India, has still worked, large part of India. See, I don't need to meet my insurance agent, right? Sure. I took my policy through, Policy Bazaar. After that, every year the link comes, I pay, and it's done, right? But we still have a insurance agent platform. It is still succeeding even in banking. The direct selling agent platform is still alive and kicking. In smaller tier 2 towns, you have chartered accountants, lawyers who double up as DSAs who work closely with the banks, or insurance agents working with the insurance companies. So I think Policy Bazaar has spotted that opportunity, that if they have to go out of urban and go deep into tier 3, tier 4 and truly become LIC, I don't think anybody can match LIC scale. But if they have dreams, hopes, ambitions to come close to that, they will need to have that model to be able to reach. Because again, it goes back into the literacy. People don't even recognize the need for insurance. I think one thing that again this pandemic has done is make people realize that anything can happen anytime, and therefore insurance is a good cover. But that message still has to be communicated to a large, wider audience who may not be using tech or online for gaining that education. And again, if you look at the e-commerce space, the Mintras of the world had to open offline stores. Sure. Right? Even Amazons of the world worldwide had to get back into a little bit of an offline space as well. So if it is so much required in countries like US, I mean, in India, the need can only be far more.
Sure. Thank you, Ankur. Natasha, coming back to you, your platform is big or going big on robo-advisory. What are the specific challenges that you see with respect to robo-advisory, not necessarily just with trust, but in general, in terms of making good advice scalable? Robo-advisory is a key tool for doing that.
Yeah.
And how do you see that ecosystem evolving?
No, great question. I think, for us, and Himanshu said this very well, and I was also noticing the interesting parallels, even though the segments are so different.
Yeah.
We rely a lot on the tech we build, data-driven, to, an AI ML model-driven to figure out how to advise customers. And it's actually a very tough problem in terms of how to use data to do that, because these are customers from a very different segment very often, and really from many different segments, right? So what an agricultural laborer might need in terms of the right solution to get them to their goals versus what a blue collar worker might need versus what a gig economy worker who might be working in a Chennai or a Bangalore might need is very different possibly. And the goals are different, the time periods of the goals, the need to achieve, the risk profile is different. And so we invest a lot in what we call the persona engine, where we really try to use data to first drive a detection of what's the persona and who is the customer that we are dealing with. We do a lot of work in our data science teams around this. We then combine it with a lot of work we do on fund analytics to also see, what are the kinds of offerings that will meet the kinds of goals that customers have. So I think that's one way we've really deepened the ability of our robo-advisory to handle many, many personas and really think through at a deeper level. And we don't discount at that design level the real value add of experts in this space. So we do cross-check our recommendations, not just initially when we're designing them, but we actually have, processes set up internally, which are largely technology-driven, but then always, again, have a financial expert coming in and looking at, are the recommendations we made in the past also appropriate? And in fact, we've built trust with customers this way. We've actually done a fund switch during the pandemic, where we saw certain debt funds starting to underperform, and we really recognized the amount of hard work that our customers have put in. I think one more point I would add in terms of at least our robo-advisory, and I think, we look at it, we try to look at it not just as wealth growth, but also as what does the customer really need at this stage of their life to achieve their goals. And so what we recommend, and in fact our recommendation engine and persona engine has to think about this as well, is what is the investment component, but then what is also, say, an insurance component. And I think it was called out very correctly by Ankur. Most people don't even recognize that they need insurance. And so that's something we have tried to automatically build into the solution. And then educate on, why is this useful? How can you use it? When can you leverage it? And additionally, we've also, since we're a neobank, we've also stitched in an emergency credit component into the same solution, because we find very often people are hesitant to save what they would like to, just because, I need to have that pot of, say, 30,000 rupees in my bank account. What if somebody in my house has to suddenly be hospitalized? How am I going to handle that? And so we've realized, again, we are just working with the customers that building in robo-advisory also around the right credit product to offer if the customer is suddenly, in their savings journey, facing issues and needs either to redeem instantly, which we support, but also to be able to access credit. That's a very useful thing. What is the right interest rate to recommend? What is the right product to recommend? So we really look at it as a solution for this customer, because we don't think this customer is capable, or they're growing, right? Definitely financial literacy is improving, but can they look at these three components constantly in their lives is the question, and we're trying to simplify that.
And do you think what you're proposing is scalable from a business point of view, revenue point of view?
See, we have invested a ton on the technology and data science side to make this scalable, right? So it's, these models that I'm talking about have a ton of data going into them. There's a lot of work that's happening to constantly refine it, to constantly see, is what we're recommending the right thing? Should we change it? Should we tweak it? And also scalability in terms of, app development. And for us, it's actually not just the app that the customer sees, that has to have a seamless experience, but we also do the same thing on the app that the agent sees or the assistant. Because we really, we work in a B2B2C model as well as in a B2C model. And so scalability is critical. And,
Absolutely.
yeah.
Thanks. So that actually lets me segue a little bit smoothly to the, switching gears part to the next topic in terms of technology and investment in technology. I mean, one could argue that we are probably in stage 2 or 3 in terms of, how technology in financial services is evolving in the country. Let me turn to you, Himanshu, and ask you, are we, as you look around, companies in this, in our industry, the fintech industry in India, are we making technology investments in the right area? I mean, you are in the cutting edge of technology, if I may say so. Do you think that the overall, as an ecosystem, we are deploying money in the right areas in technology?
A great question, Srikanth. I think my immediate response would be actually no, right? While technology and technology companies do attract a fair bit of capital, there is always sort of the pressure to scale and, turn to profitability within certain expectations, right? And a fair bit of the funding that comes into companies ends up getting diverted towards, branding, business development and stuff like that. So while the intention is always to spend in technology, we see tech spend sort of getting split in 2 areas, right? One is tech application. So there's nothing new really going on, right? More novel ways of applying existing technology, right? AI ML, of course, open doors to a plethora of use cases, right? And through large companies and small, a lot of these are getting a little more standardized, whether you think about it in the form of chatbots, even, right? Which you now find on a lot of banking websites. But if you really look at, earth-shattering kind of significant changes like the internet maybe, right? AI ML is probably in that space, but it probably is not getting as much as it should. In the Indian context, again, I think R&D spend typically is a very small portion, right? And it's time, I think, shareholders, investors, regulators need to recognize the long-term benefits of R&D spend overall, right? Now, whether that's manufacturing or it's, software in terms of technology. I think we don't necessarily do enough. And there's certainly room to do more.
Thank you. Karan, similar question to you. From the point of view of Kissht, your app, how do you work with it to make sure that you are future ready when it comes to technology? And before you answer, Amit, if there are any audience questions, you can give them to me at this point of time, but we can continue with this right now. Yes, go ahead, Karan.
No, so you're absolutely right. We have to invest a lot. We have to keep our eyes on the future. I think what Himanshu mentioned is strategic leaps are few and far in between. But maybe in some cases you might be too late to realize the question. I think someone brought up crypto. The question is whether crypto is going to be the superseding theme of everything to do with fintech in the future. Maybe, maybe not, but you have to be clued in to see what is going on, whether the adoption is going up. Are there companies across the globe doing something with lending and crypto in general? But the bigger themes are, I think you have to have a large part of the focus. As a CTO, as a co-founder of the company, we are, when we say we are a lending fintech, trust me, the part of the tech has an outsized focus from us compared to the finance part. The finance part is a function that has been done for several decades and I think is more or less science right now. But the tech part is something that is always evolving. We are looking internally within our teams to identify whether there are some ideas that we should be exploring. We are looking at our peers to see what they are doing. We are actually looking at the entire globe. And then you're also not looking only at fintech. You have to look at other areas also. There are things that are happening, for example, with NFTs all of a sudden, where you have to really think whether there is an angle to NFTs that can play with lending or not. But it always demands a lot of investment in terms of time, energy, focus of all of your senior management, and in fact, a large part of your tech team has to be focused. We actually have a separate Slack channel only for discussing these potential ideas, right? Pick out an idea that literally is hot right now and see whether it has any impact on us for us to chase it down. And that's what you have to do. It has to be a part of your workflow. It has to be a part of your weekly routine, and it can't be that, okay, I'm carving out half an hour for tech R&D. It should be a part of your DNA, where you are investing time and energy onto newer technologies. Over the past 3 years at Kissht, we've literally revamped our tech stack 3 times, because literally those are the changes. We went from a monolithic to a microservice architecture. We recently made a switch to a completely serverless architecture. All of this is because Amazon has been progressing at a different place. Monolithic was okay for us 3 years ago. Microservice was okay for us 2 years ago. Containerized was okay for us 1 year ago. Now it is time to go serverless, and that's where we are. But you have to keep doing that investment. By the way, this also requires a massive buy-in from the business side of things. These are costs, or these are investments that you might not be able to easily explain to a non-tech CEO. Thankfully, Kissht has a techie CEO, but he does understand and value all of these investments. But I can imagine a lot of companies having a non-techie CEO, but you'd have to get the business to buy in. These investments are not, whims and fancies of the CTO or the tech team. They are actually investments that pay off rich dividends in the future.
Thank you. Ankur, do you think, would you advise your portfolio companies, or where you're in the board or something like that, to start off something like a Skunkworks or a Tiger Team project with blockchain, or to see what would be applicable, smart contracts or something like that, to see whether it would be applicable to their business? Is it time for companies to start venturing into that, whether it is like directly relevant to them or not?
It's difficult. See, we are early stage investors. What you're talking about requires a lot of time and money. And I think something that both Himanshu and Karan said, see, investment in tech, you have to understand, is tech an enabler or tech is a differentiator? Where tech is an enabler, right, tech is hidden. It is very important for the functioning of the company, for the success of the company, right? But if, it is and therefore there the investment in tech is, like Karan said, you need to understand. But even if you have to understand, right, there is a time and place. At the stage at which we are, our next investor will be more focused on the growth that the business has achieved versus the hardcore tech that they have built in the background. So it needs to have a good functional tech on the basis of which solid business growth has to be delivered. Once you reach a certain stage, then yes, you should start using tech to become a differentiator then. So tech can switch from being an enabler to a differentiator once you reach a certain scale, once you have a certain funding, visibility. But in the earlier days of a startup where visibility is, always a question mark, right? At that stage, it might be a very difficult sell for me to tell my founders to focus away from, delivering the results and building something which will have definitely long-term benefits.
I appreciate it, Ankur. That's a very grounded, very practical answer, and that's probably the need of the hour in many places. I mean, you can get distracted by tech sometimes. I mean, there are so many new things that are coming up every single day, and it's like, from a tech entrepreneurial standpoint, it's like you might want to grab onto everything that's coming new. And more likely than not, it's not a good idea, and we need to keep focus on the business, because that's what delivers at the end of the day.
The problem is, Rahul, by the time you realize whether it's a good idea or a bad idea, a lot of time and money has gone.
That is true, and the tech has moved on too by then to something else. So thank you all panelists. I mean, Amit, do we have any questions from the audience? I can't hear you.
On your WhatsApp, I think.
Yeah.
I think we're learning how to do this hybrid thing.
Okay. All right, I'll go to Himanshu with this. what are some of the leading technology trends now in wealth management industry, and are these technology trends and developments relevant to just the biggest firms, or can smaller players also be a part of these trends? I mean, I just opened with Himanshu, but if anybody else wants to jump in, please feel free to.
So, that's a fantastic question. I think when it comes to tech, right, the good news is that if it's applying tech, it's not necessarily a domain limited to players with big pockets, right? We are a relatively young company, 5.5 years old. We've developed most of our own tech, use some existing building blocks, right? So tech is certainly something that pretty much anyone with the right focus, with the right idea can consider, can apply. I think on the question of trends, right, there's of course, robo-advisory is probably the biggest in the WealthTech space in terms of a trend, right, that we observe in terms of, application of AI ML. I briefly mentioned, chatbots also. We do see those coming into the WealthTech space, although it's a fairly new domain from a chatbot perspective. So really building the kind of chatbot experience is a little different. We also see, trends in terms of simple robotic process automation, whether it's in the finance function, whether it's in stuff like KYC, whether it's in areas like AML, CFT. Again, all very important areas. But really the big one is people are thinking a lot in terms of, applying blockchain or related technologies. And the reality is that it doesn't necessarily suit every business. Even in WealthTech. Sure, it's cool tech. It's the buzzword today. But to the point Ankur was making, it may not be the right time for everyone. And yes, we do see the larger players investing a lot more. I think they do have a lot more at stake. They've had a bit of a bumpy ride since 2008 in terms of recreating a lot of credibility. But I think in summary, I would say that AI/ML from a context of robo-advisory, enhancing the user experience, building out on the whole UI also, and possibly considering things like NFT and blockchain are the areas that people are currently focused on.
Thank you. Anybody else wants to add anything? 60 seconds.
I would totally agree with Himanshu. I think the one other area I am hoping we can invest time in, and also others, is just voice and vernacular languages, and being able to create experiences that are more intuitive for customers, but use technology to do that. And so, fully along the chatbot theme, but how do you also bring in that kind of touch component with actual tech build? So that's one area, at least we're hoping to push on.
Excellent.
Localization in India is big.
Absolutely.
I'm thinking global, so it's not the most obvious thing, but absolutely.
Yeah.
And security. I mean, the moment you start touching FinTech, security should be a very key focus.
Absolutely.
I think, Ankur, on that, it tends to be a given, really. Yeah. It's a bit of a hygiene factor.
No, but it can always be improved, right, Himanshu? So, for example, blockchain is nothing but making sure that your transactions can get secured in places where you can apply, that much better. How your transactions are happening. There's still frauds happening, and I recently became a victim of one. Right. How do we, because that is where trust starts getting broken. Now I'm an ardent believer of online transactions. So one bad mishap doesn't change my whole focus. But, my wife, who is a very hesitant adopter, she was like, oh, and unfortunately it happened with her card. And she was like, all of a sudden, oh, no, this is not correct. I will stop using my card online and everything. And I'm like, no, it's okay. I mean, so it's given, but people who are doing it are far ahead of us. And then the security has to keep just catching up.
Absolutely.
Keep on improving.
Yeah.
Absolutely.
Sure, that's a fair point.
Excellent. I think we've shot past our time a little bit, but not much. But this has been a very engaging and interesting session, at least for me, and I hope our listeners and viewers found it the same way. Thank you, Ankur, Karan, Himanshu, and definitely Natasha for being here with me here. So thank you all, and that brings us to a close. Thank you.
Our pleasure here. Thank you, everyone.
Thanks a
Pleasure.
lot.
Thank you so much.
Thank you.
Thank you, Mr. Srikanth and Natasha, Ankur, Himanshu as well, and all the speakers today. It has been a great conversation, really. And now, for the viewers, it's time to move on to our next session, which is on lending for millennials. To join the next session, head over to the agenda section on this virtual event platform and select the next session.
100 रुपये में बिटकॉइन ट्रेडिंग
पॉसिबल है
इम्पॉसिबल
लगी शर्त और हारा तो It's possible on CoinSwitch Kuber. Download करो और Bitcoin में trading start. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fego, a pioneer in the world of intelligent open finance. With our full stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.